Thanks for joining us from the Ohio AgNet Voice You Know It, the News You Trust studio, sponsored by Grain Equipment Company, where innovation meets execution. I'm Dale Menyo. Powered by Soy Biodiesel. On Wednesday this week, it looks like it might be the hottest day of the week coming up. We'll be at the Richwood Independent Fair, all thanks to Axis Seeds and their county fair tour. On Thursday, we'll head north to Hancock County Fair, thanks to Nutrient Ag Solutions and the Hancock County Farm Bureau. Stop out and see us at either fair. On Friday, the cattle and calves on feed report came out for the slaughter market, with those with a capacity of 1,000 head or more. It totaled 11.1 million head on August 1st. The inventory was slightly above August 1 of USDA's 2023 report. Now, the placements into feedlots during July totaled 1.7 million head, 6% above a year ago. Net placements were 1.65 million head. Marketing of fed cattle during July totaled 1.86 million head, 8% above that of a year ago. The DTN analysis of the report shows Friday's cattle on feed report came out almost exactly as the pre-report estimates forecast. Other than placements category, of course, said DTN livestock analyst Shaylee Stewart. Now, we know heading into Friday that the cattle on feed report was going to be a bear to get around, given that placements were most likely going to be higher than a year ago, but you never know what the report is going to reveal until the veil is pulled back. Let's first start with the data. Friday's data on the cattle on feed report at 1,702,000 head, up 6% compared to a year ago. That may seem alarming, especially given that analysts only expected placements to be up 4% compared to a year ago. But comparing this year's data set to last year isn't like comparing apples to apples. It's more like comparing apples to apes. If we take a step back and remember that market's environment last year, cattlemen were plagued with drought. Market cattle marketed early to avoid being short on grass. That was a completely different reality than the one in which the market is currently wading through, as cattlemen have mostly been blessed with ample feed resources and were highly incentivized this spring and summer to market their calves and feeders, as prices were historically high. And it would be negligent to also overlook the fact that Mexican feeder cattle imports are up 27% year to date. Today's weather brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Here's the forecast.
We've got some heat building in Ohio this week. I'm Chief Meteorologist Ryan Martin with the Ohio Ag Weather Update. Taking a look at the situation unfolding here, strong southwest flow is in place, and we're going to be seeing temperatures well above normal all week long. August weather finally wanting to show up here after a week or so of not August weather. We're not just looking at hot temperatures, but we're seeing high humidity levels as well. With that, I think we're going to be dealing with on-again, off-again showers and thunderstorms, pop-up heat-based activity through the night tonight into tomorrow, mostly limiting that to northwest Ohio. But then through the balance of Tuesday and into Wednesday, Tuesday night, Wednesday, we have the round that comes through and hits almost everyone. Wednesday night into Thursday, we don't see much, but then at Thursday midday, right on through Friday, we see plenty of shower and storm action trying to pop off ahead of a frontal boundary that passes a late Friday afternoon. So combined, if you go from tonight right on through Saturday early morning, I think you have to pencil in anywhere from a quarter to 1 inch with coverage around 90% of the Buckeye State. Once again, the least likely to get big rains is going to be south central, southeastern parts of the state where we are dry already. Most recent drought monitor showing just how far behind we are there. So I'm not sure this gets us over the top. There will be a few Band-Aid kind of rains in that area, but not excessive. Behind the front, we are cooler for the weekend, Saturday, Sunday, and Labor Day Monday, but not cold. Temperatures are going to be quite pleasant. Humidity values quite pleasant as well. Next chance of moisture may not show up until late next Wednesday afternoon into Thursday. I'm Ryan Martin.
And thanks, Ryan. Joining me is Tad Nicholson, Executive Director of Ohio Corn and Wheat. We're going to talk about farm financial management and Policy Institute. It is a program put together by Ohio State. Kind of give us the background. What's the intent that they're trying to figure out?
As the title would say, it's all about the business side of farming. And that's what really intrigued our board as we were looking at checkoff dollars to support something like this. It's all the important things that are not driving tractors or selecting seed. This is the finance. So how do you get better at marketing grain? How do you figure out your risk management tools, and how do those relate to each other? Those type of things that farmers really are going to have to, especially in a year like this, where you really have to get good at these things. It's a prime year to need this type of a tool from Ohio State.
Well, I wondered if the tool actually became a result of we're back to a trying time that we've not seen in some cases to this extent for a long time. Did it pressure the situation? Because I always ask farmers, well, what price are you willing to sell at? Nobody ever says the cost of production plus 15% would be a great place. And I'm like, okay, so how do we know, and how do you build a formula? So it'll be interesting to see what the results of this really play out to be.
Yeah, there's all sorts of things that we could get into there. This was happening for several years, though, as it was getting built. We weren't in this type of year always, so it's just a recognition by our board, by Ohio State, to say there needs to be expertise in the business side of farming. That time when you're sitting in front of the computer instead of the wheel of a tractor, and so that is really what the Institute has become all about.
Tad Nicholson, my guest, Executive Director of Ohio Corn and Wheat. And again, that website is farmoffice@osu.edu.
farmoffice.osu.edu.
And thanks, Tad. Back with more after this.
Time is running out to earn more for your acres. The Soil and Water Outcomes Fund pays farmers to begin or expand on-farm conservation, like reduced tillage and cover crops. Last year, they paid farmers an average of $33 per acre. They offer one-year contracts, and 50% is paid prior to verification. Get paid to reduce erosion, improve your soil health, and more. Hurry to their website to request a payment estimate, theoutcomesfund.com. That's theoutcomesfund.com.
Soybeans grown in Ohio and across the heartland are meeting the feedstock demand for clean fuels. Biodiesel is a clean-burning and reliable fuel that enhances engine life, power, and mileage. Plus, this high-performance fuel works in any diesel engine without modification. With biodiesel, we fuel the economy, do good for the environment, and support soybean farmers. Learn how using biodiesel can add value to every bushel of soybeans grown at soyohio.org. Well, in August, the California Air Resources Board, or CARB, unveiled proposed modifications to its low-carbon fuel standard, initiating a 15-day public comment period. The American Soybean Association is actively reviewing the proposal, which, at first glance, appears to pose significant challenges for soy-based biofuels. Established in 2009, CARB's low-carbon fuel standard is a cornerstone of California's strategy to reduce greenhouse gas emissions and other pollutants. The LCFS program, implemented in 2011, sets carbon intensity benchmarks for fuels, rewarding those with lower emissions and penalizing those above the benchmark. The CARB proposal introduces revisions including capping soybean oil use. CARB proposes a 20% cap on the use of vegetable oil, including soy and canola, on a company-wide basis. Biofuels exceeding this cap would be classified as fossil fuels. While CARB hinted at such a cap last year, it was not included in previous proposals or workshops. CARB's rationale is to prevent the low-carbon fuel standard from incentivizing increased production of vegetable oil-based biodiesels solely to meet California's demand. The data indicates that in the first quarter of 2024, Virgin Oils, accounting for 30% of the biodiesel shipped into California. Also, restricting biodiesel pathways, the proposal grants CARB's executive officer the discretion to halt acceptance of new biodiesel pathway applications in 2031 if sales of zero-emission vehicles reach a specified threshold. This could limit future market expansion for biodiesel. Sustainability criteria. A phased timetable for sustainability requirements will be implemented with specific benchmarks starting in 2026. Fuel producers must submit data on farm boundaries where soybeans are sourced. Also, the regional land use change. The proposal introduces more conservative land use change values for different feedstock producing regions, assigning varying scores based on geographic area of production. The American Soybean Association submitted comments on the proposed changes, expressing particular concern about the proposed cap on soybean oil. Time now for the Louis Dreyfus Grain Analysis, brought to you by the Ohio Soybean Council and your soybean checkoff. Here's Ryan Martin.
Grain markets finished mixed on Friday. Here we go on another week. Who knows how it's going to go this time around? Let's start with the demand side of the equation. Another flash reported sale came out on a Friday morning on soybeans, 125,000 tons to China/unknown. So the frequency last week was nice. That was 5 straight days of flash reported sales. The problem is the volume was minuscule. That 125,000 tons Friday, that was similar to other sales the prior days last week. And so we're starting to run out of time to get to that 20 to 22 million metric ton mark. No one thinks that China's not going to make it there, but now we're starting to get nervous on the timing overall. The stock market rallied last Friday as well. Dollar lower and the treasury rates were falling as the central bank chairman Powell indicated that the time has come for the U.S. interest rate policy to adjust. Powell laid the groundwork for an interest rate cut, at least one, but did not provide exact timing or amounts. He's strongly suggesting that the cycle has changed for the first time in 4 years. The market is pricing in 100% odds that the Fed adjusts their lending rate downward by at least 0.25% in September. Odds growing for maybe a 50-point cut as well. We will see. Labor market is weakening. The downside price target for the U.S. dollar is about 95 cents. The spot Brazilian real is trading at 5.50 to 1 versus the U.S. dollar. The ruble is priced at 91.5 to 1. As we take a look at other things, the charts are showing an overall bearish turn in the U.S. dollar. Wheat futures resumed their decline amid the wrinkle in the reopening of the Canadian railroads. That strike was off, then back on, and I think we're going back into potentially a round of arbitration later this week, depending on how the talks go today, tomorrow, and Wednesday. I'm Ryan Martin.
And thanks, Ryan. I'll have the overnight figures to start the week after this.
Hey Ohio, exciting news coming to you from Ohio's Country Journal. Subscribe or renew your free subscription by September 20th of 2024 and you could win one of 4 50-inch televisions. Ohio's Country Journal is free, but subscribers have to renew their subscriptions every 3 years to continue to receive it. Subscribe or renew to stay updated on all things Ohio, from agricultural insights to rural lifestyle. Don't miss out. Visit our website today at ocj.com/renew.
It's time to cut costs. Your Meristem dealer has the keys. Unlock the NPK you already own with new, improved Excavator AMS powered by microbialized technology. Excavator AMS is the first and only all-in-one nutrient release and residue breakdown product with built-in nitrogen, surfactants, and water conditioner. Take cost out of your fertilizer and adjuvant spend now. Unlock nutrition faster with Excavator AMS. Learn more and find a dealer at meristemag.com. Always more bushels for less.
Today's market brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Quickly recapping last week, December corn was down 2.5%, November beans up 11.5%, and July new crop wheat down 7 1/4. Looking to the overnight figures to start the week, we have September corn down 3 3/4 at $3.64. December down 3.5%, trading $3.87.5. If you carried that crop to March, you're at $4.05 3/4. Down 3 3/4. September soybeans down 4 at $9.48. November new crop down 4.5 at $9.68.5. Carry that crop to March of next year, and you're down 5, but at $10.01 1/4. September wheat down $0.01 3/4 at $5.01. July new crop down 3 at $5.64. Carried it out to September, and your $5.77 down 2 1/4. In livestock, August cattle up 2 cents at $182.57. The October down 20 cents at $175.70. October lean hogs up 92 cents at $80.55. December hogs up 47 cents at 70.75. In September, feeder cattle were up 37 cents at $238.57. The October up 12 cents at $234.37. September Class 3 milk this morning is down 6 cents at $21.73, while the October Class 3 milk is down a nickel at $22.25. Thanks for joining us. I'm Dale Minyo. This is the Ohio AgNet.